Hello traders, you're welcome back to the Forex Geek channel. In this video, we are going to walk through how to create a trading strategy in MetaTrader 4 and MetaTrader 5 from the ground up, okay? Before you place a single trade, you need a clear plan, right? The first step is market selection. All right, you need to decide which assets you are going to focus on. This could be major currency pairs like the Euro USD, or it could even be indices, maybe indices like S&P 500, or maybe commodities like gold, right? The idea here is to specialize so you can get familiar with how your chosen market behaves, okay? The next thing is time frame selection. Your trading time frame should match both your lifestyle and your personality. Okay? If you enjoy quick decision making and you have time to watch the charts closely, you might choose the 1 minute or the 5 minute chart for scalping. All right? If you prefer a slower pace, you might opt for the 1 hour or daily chart for swing trading. Now, once your markets and your time frames are set, it's time to choose your technical tools. Okay, this could be something as simple as a moving average to identify, trend direction. Okay, so it could be as simple as a moving average to identify trend direction, and maybe support and resistance levels, support and resistance levels to mark your key zones. All right, and maybe oscillators like the relative strength index, a popular one, probably to spot potential reversals. All right, MT4 and MT5 both allow you to load these tools onto your charts easily, just like I did. Or you can even go through insert indicators and then you select the particular indicators that you want to add to your chart. Okay, then with your mouse you can just select whatever tools, drawing tools that you want to draw right onto your chart. Okay, you can even add custom indicators. If you have custom indicators, you can add custom indicators to your chart. All right, and see there is a portion for custom. You can add custom indicators to your chart. That's if you have them. Okay, all right, now comes the most critical parts, which are the entry and the exit rules. You must define exactly what conditions need to be met for you to enter a trade. Okay, this might include trend direction, indicator confirmation, or a specific candlestick pattern. Yeah, similarly, you should define your exit rules, both for taking a loss and for taking profit. Then you should define or decide on your stop loss placement based on technical levels of volatility and ensure that your position size aligns with your risk tolerance. So basically, whatever strategy that you are using, before you even start trading, you should already know the kind of risks you want to be taking. You should already know the factors that determine when to buy, the factors that determine when to sell, the factors that determine when to exit your trade, whether it's in a profit or in a loss. These are simple things that you should know ahead of time before you even execute the trade. Okay, take for example, maybe you are using a simple moving average strategy, crossover strategy. Maybe your buy signal could be when the price crosses above the moving average and you have a bullish candlestick pattern to confirm it, right? And then maybe you enter immediately after the candlestick pattern forms, and maybe you set your stop loss below the recent swing low, and maybe you target your resistance zones for your take profit. So those are, rules that will guide your trade, your trade execution and your trade management. Okay, and then you could say that if price should drop below the moving average, then that will be a factor to exit your trade, even if it has not yet gotten into your take profit. So those are some of the rules that you should already have in place as a strategy, all right, before you even execute a trade, because you need to have clearly defined rules that will guide you, clearly defined principles that will guide you as you trade, in order to avoid unnecessary regrets, in order to avoid unnecessary losses, in order to avoid situations whereby you will have profitable trades that will now turn into losing trades. That's a very, very terrible feeling, that your trade was in profit and it got close to your take profit, and at the end of the day it ended up hitting your stop loss. So if you want to avoid such situations, you should have certain rules, certain principles in place, such that even if you are in profit, once the market has gone in your favor to an extent, that trade should not turn into a losing trade again. All right. So those are some of the things that you can put in place. You can even be using trailing stop losses, right? You can be trailing your stop loss as price goes in your direction. So once you have your rules, you need to test them. Okay. Both MT4 and MT5 have a built-in strategy tester. All right, that allows you to backtest automated strategies. You can see strategy tester. It allows you to backtest automated strategies, and you can also manually go back over historical charts, to see how your rules would have performed. The goal is to ensure your strategy is consistent and makes sense before applying it in live markets. So by the end of this process, you should have a trading strategy that is tailored to your style and backed by data. If you enjoyed this guide, click the like button and subscribe for more MT4 and MT5 tutorials, strategy breakdowns, and trading tips. Thank you for watching. I look forward to seeing you in the next video. Happy trading.